Joining us now is Hatem Dhiab, managing partner, Gerber Kawasaki Wealth Investment Management. Hatem, good to have you here with us. You know, we're talking Tesla off about 13% right now, adding to those 2022 losses. How big of a worry is this miss on deliveries? Because 40% growth is impressive, but it's still a miss.
Caroline, thank you for having me. As you said, the mess is a mess. You know, it's you can't spin this, right? The street was expecting about 420,000 deliveries. They did 405,000. Stocks trade against their expectations, right? So with Tesla, expectations were super high. Elon has always set the bar super high. So for them to miss on deliveries, it just kind of creates more fodder to the narrative that demand is waning down, that Musk is distracted, and that's why the stock's being sold this morning.
All right, so I want to talk about both of those things, demand and distraction. But let's start with demand, because for so long, Elon Musk maintained that Tesla didn't have a demand problem and had a supply problem. Does Tesla officially have a demand problem?
I don't think so. I believe Elon there, but the global economy is going through a downturn. You know, we all know that we're probably going to go into recession. So as a result, you know, these are highly priced cars, and when you offer a bunch of discounts in the last 2 or 3 weeks of the quarter, people will start thinking, or at least interpreting, that there is a demand problem. So it's really about a narrative situation. I think EVs are just barely getting started, and Tesla is by far the best EV on the market. But I think what this is doing is just really allowing for that narrative to build.
EVs are just getting started, and Tesla obviously has a leg up, but there's a lot of competition in the pipeline. So how much could that pressure a stock that's already gotten absolutely crushed? Right.
I mean, you got to kind of separate the car or the car itself from the stock. The EVs, you know, we're selling barely 5% of the 5% of the cars sold in America are EVs, and we sell about 75 million cars every year. So if the adoption of EVs goes from 5 to 10 to 20%, every EV manufacturer is gonna benefit, and Tesla, being the leader, will benefit even more. So I'm not worried there. If you look at globally, the adoption is even bigger. In China, it's 25%. In Europe, is almost 10%, and Tesla is just getting started in Europe with Berlin factory. As far as the stock goes, a lot of these expectations were built in. You know, as the stock was expensive 6 months ago, now it's no longer expensive because these expectations are changing.
Would you buy the dip here off 13%, trading around 107?
Yeah, we're definitely buyers. I think a lot of this this is really short-term distractions that I think will work themselves out. At the end of the day, the stock market is a weighing machine, but then short-term is a voting machine, and I hate to just use that adage. But ultimately, right now, people are worried about the short-term, but long-term, the story really hasn't changed.
So let's go back to that distraction component. What do you make of the Twitter overhang? Not just in terms of the damage that it's done because of Elon Musk selling Tesla shares, but also just because of how much he's tweeting and potentially losing credibility. How much is that this decline that we've seen in Tesla stock because of the Twitter distraction?
You know, as a shareholder, I'm super frustrated, right? I don't think getting into politics and really alienating some of your customers or some of your supporters, frankly, you know, these are a lot of the kind of the liberals or the pro-climate people who are the ones that are buying Teslas early on, and really, as a CEO, going on Twitter and trying to or starting to kind of create this this division really is not helping, you know, and frankly, that's what's hurting him. Now, the Twitter distraction is a real thing. I've heard it many times. People not wanting to buy Teslas anymore. There used to be a brand associated with Tesla, and now people are starting to think, okay, maybe it's not as cool to own a Tesla or be driving a Tesla. So I think he needs to change that, frankly.
All right, so we'll see if he has any impact. That has any impact on how much he's actually tweeting. All right, I want to talk just quickly about China as well. Obviously, there's a lot of competition there. Does Tesla's reliance on China help it or hurt it? And have the Chinese EV car makers caught up to Tesla at this point?
I think China is the biggest car market in the world, right? So Tesla being there early on and actually owning their operation, which is very unique to Tesla, is a very, very important thing. Have the Chinese caught up to Tesla? I think the Chinese are doing a great job with a lot of their cars, but from a technological standpoint, I think Tesla still does have the edge. They manufacture their own batteries, they have the best software, and they really have some large share in the China market. Now, I think China opening is actually even a bigger catalyst for Tesla, because this market that's, for the last year or so, couple years with COVID, we were really worried about that economy and really dragging the whole global economy. But now that they've changed their zero COVID policy and the Chinese economy will pick up, I think that will be actually very, very positive for China. And Tesla.
We have to leave it there. Hatem Dhiab, Gerber Kawasaki Wealth and Investment Management. Thanks so much for joining us. Good to see you.
Thank you. Good to see you. Cheers.